Alright, so let's begin the show. And today in studios, I have with me Feroze Azeez, Deputy CEO, Anand Rathi Wealth. Feroze, good evening and welcome to the Money Show today on this very special occasion of Diwali. And ye Diwali, Muskan Wali to you too.
Same, Kavita. It's such an honor to be with you in this festive season. Wish all of your viewers a Muskan Wali Diwali.
Thank you. Let's talk about investments and let's talk about Diwali. Okay, let's start off with a small recap from last Diwali to this Diwali. Initially, when we were having conversations, during last year, this time around, people or analysts, we spoke to you also. When we talk about portfolio rebalancing or reshuffling, a lot of recommendation came towards having more exposure towards debt and equity, towards debt. But now when we talk about reshuffling your portfolio, reshaping your portfolio, a lot of that has gone out. And when you talk about having your exposure across market caps, a lot of place has been taken by mid cap, small cap, which maybe now can be gone down, and maybe you can go heavy in large cap. How exactly the entire year from last Diwali to this Diwali has changed in terms of debt scenario, in terms of equity scenario? How much have investors earned?
I think investors have earned generously if they have been equity heavy. Now, of course, it's been an eventful year, and the events have favored India more so. The events which have been detrimental to the globe have been the same events which have been actually positive for India. Because generally in the last 16, 17 years of me being in this profession, I've seen that the problems which the globe has, it's the same problem India has. But this is the first time I'm seeing a problem in the globe, largely interest rates and inflation, and India is not having that problem because India has always had a high interest rate, high inflation. That's point one. Point two, we went very heavy on equity. From 2020 August, from the COVID time. So we continued our bullishness across 2-3 Diwalis on being positive on equity because we had seen that the earnings of Nifty companies were supposed to be moving higher. So 572 rupees is what the earnings of Nifty companies were in the year. Then it moved to 772, moved to 820. This year we are expecting it to move to 944. That kind of earnings growth has not been seen consecutively for several periods. So equity heavy, continue to be equity heavy. Second, we think that the debt market is a more complex market than equity. Fortunately, the debt fund investors have not lost as much money as they could have because RBI tightened its liquidity and also increased the interest rates by significant amounts. But the 10-year government paper of India has marginally moved by 0.5%. When in the same period, repo has moved up by 2.75%. So that's a great cushion. So people have not lost money on the bond side. So I personally think the third point which we went very bullish this beginning of this year on your shows, largely Kavita, because you are one of the best mediums to reach the largest universe in the country, was to go heavy on small cap. And I think that is paid out, and I still believe there's more juice left for the next few years.
So talking more about small cap, in this 1 year's time, what's been the performance like?
The performance in absolute terms on the index has been 38-40%. But if you look at its relative performance with respect to Nifty, which is a very good way of, or a barometer for equity measurements, about 25 to 28% extra return over Nifty is what small caps have delivered. And I think that's a substantive move upwards. If you look at today also, if you look at Nifty small cap 250, the level of that index, which most people don't track, is about 12,000. Okay, the earnings of this index we estimated to be 636 rupees. The small cap PE over the last 22 years could be considered to be 23 as a fair PE. What is PE? PE is nothing but the price divided by the earnings. If the price is 12,000 and the earnings hopefully for this year are 636, it's still lower than 20 PE. We believe that small cap, some stocks are obscenely valued, but they're on the same hand, there are several 50-100 stocks in the 250 which are not valued as much. So I think small cap still has juice. Because the fundamental valuations are at 14,000 according to us, but the current level is at 12,000.
So, you have various type of clients. We talk about retail. You also have HNI, Ultra HNI as clients. I want to understand the kind of investment trend that they've followed in this one entire year. What's been an extraordinary or a new trend that you must have noticed among retail investors, HNI, Ultra HNI?
The retail investor this time very clearly exhibited that the actions which he or she is taking are not on the basis of greed or fear.
Okay.
How do you come
What
to...
triggered that kind of a mindset? What must have triggered?
What must have triggered is education. Firstly, is this intuition of mine correct or not? Let's examine that. October 2021, market was at 18,500. October 2023, which is 2 years hence, market on 26th of October, the last month's expiry, it was 18,850, which is give or take almost same for 2 years. So markets didn't do anything for 2 big years. But the SIP numbers moved up from 11,000 to 16,900.
Exactly.
So in the previous regime, when people were only looking at past performance, greed and fear and acting, if such market volatility is seen and flat markets are seen, SIPs would stop, not increase.
True.
I think it is a right intuition because retail investor is still there in spite of 2 years of almost no return on a year-to-year basis. And also the fact that it's gone up, I personally think education is the big cause and all stakeholders are to be commended for that. That's starting from SEBI, AMFI, mutual funds and largely the media houses like yourself.
Going ahead, so from last Diwali to this Diwali, now from this Diwali to next Diwali, okay, we've seen the performance, you've been seeing on screen also across asset classes, what has performed, how they have performed, but then now going ahead, across asset classes, where exactly is the duration play that maybe you can opt for? What kind of asset class?
See, a Diwali to Diwali like this year comes once in 5 years. Why? Because you have a general election encompassed between these two Diwalis.
Right.
So this, to my mind, is an opportunity more than an adversity. Okay, since the Nifty is still at 19,400 and it had a PE when the markets were at 11,000 2-3 years back, it had a certain PE. Today also it's the same PE in spite of market rally because earnings have also gone up significantly, not just the price. So this election wali Diwali,
that's the right way to put
and
it.
I hope that is also, election is also a Muskan, hopefully, has a larger significance, larger importance. We checked 5 elections and we realized that election years are actually great 1-year investment periods also for equity. Not that I'm recommending a 1-year equity investment, not in my wildest of the dreams, but even a 1-year investor during elections has not lost money. And I think there will be a lot of money which will flow into India if capital market gets an election mandate which is what to its liking. That is the third continuity. Capital markets always like continuity. So if there is a third mandate to the government, I think capital markets will rejoice. And there's a lot of money which is waiting for this event to be behind us and FIR monies will flow lock, stock, barrel if this were to happen. So I, being a long-term investor, would have most of my money invested before this general election is passed.
What about gold, and the current rate cut scenario, which seems to be slightly far off now? Time to have money in gold?
I think gold per se I don't like as much. But if you superimpose some benefits of gold, then I start liking it. If you look at sovereign gold bonds, they're gold plus 5%.
Yeah, true.
Sovereign gold bonds are like gold plus 5%, 2.5% of interest, plus 2% of tax discount. So 5% per year is, if gold standalone in rupee terms gave 8%, if I bought a bar from the client, from the jeweler, and a sovereign gold bond in the same period can give me 12, 13 on a tax basis, on a pre-tax basis equivalent, then it's a great asset. So gold, not a great asset in dollar terms. In rupee terms, gold is still a good asset because rupee depreciates over long periods of time. That's superimposed with not buying bars and coins, but buying a sovereign gold bond is like rupee depreciation plus the benefits of sovereign gold bond make a sovereign gold bond a very, very attractive instrument to be in the portfolio.
All right. So whenever we have you on the show, we also have our viewers waiting for your recommendations and that portfolio tip that you might want to give. So what kind of funds you think investors should be investing now, considering it's Diwali and it's also a very auspicious time to start your investments going ahead. So what are the funds that you might want to recommend, and what is the kind of analysis that you might want to put on it?
Yes, Kavita, one thing before I get to what is the segment in which an investor should be, let me also give some guidance based on
Sure.
mathematics that what you shouldn't be buying.
Very important.
Okay?
Yeah.
I have done a lot of study, and my colleagues, of course, have done and supported me in that study, that if you buy a sector fund, you're going to be chasing your own tail.
Okay.
Because in the equity market, sectors are very dynamic, right? I was very bullish actually in the June quarter on IT.
Okay.
And in the September quarter, I am bearish on IT, right? And in the middle, IT outperformed Nifty by 7-8%. But can an investor get in and get out in 3 months? He will have to pay short-term capital gains. He will have to pay exit loads.
Right.
So don't ever do sector fund. However, on paper, you can see so much profit, but you will never be able to realize it. That's what data says. Second, don't get into funds which are not having a 3-year data.
Right.
Right? So don't buy schemes which are 1 year old, 6 months old, NFOs. You have to base your decision on math. And if there is a fund which does not have math, how are you investing?
Sure.
That's my question. So don't do these two. Now what to do is the more important
Exactly,
question, of
yeah.
course, Kavita, coming back to your pointed requirement. I would say that I can give you 6 funds as a viewer. Not that these 6 funds will be the greatest funds, but they bought in a combination, have the potential to beat Nifty by 3%. If that's your expectation, of course, out of this 6, there could be 1 or 2 duds. But if you don't do mathematics, out of 6, 4 are duds. So you're trying to do mathematics to have lesser failures and
Sure.
more gains. So you can look at a DSP equity opportunities. You can look at a HDFC Flexi Cap. You can look at a quant value. Or active, one of these two, both have a very similar strategy. You can look at SBI Contra, Aditya Birla Small Cap, and lastly, you can also look at, I think 5 are good enough. Let me refrain from giving more. These 5
Sure.
schemes bought as a combination. You can't
Right.
pick one of them and expect that same one would do better, because there will be some schemes which will not do well. So buy all the 5, even if you have 2,500 rupees, spread that thin enough
Right.
as 500 rupees into 5 of these SIPs.
All right, time to wrap up this discussion, but then a small Muskan Wali Diwali wish for our viewers and a pro tip once again.
See, I think all net money is just a means to be happy.
Sure.
It's a necessary but not a sufficient condition to be happy. So my wish is that each one of you watching not just gets money and that kind of wealth, but also the wealth of relationships, because relationships is what is a necessary and a sufficient condition to be happy. So may this Diwali bring you prosperity on the wealth side and also on the relationship side, so that Muskan is retained for the full year.
All right, thank you so much, and we also wish the same for you. Thank you so much for being on the show today. And on that note, let's take a quick break, but then post that we'll be joined by Amol Joshi for your portfolio related queries.